Droneshield once again reached all of targets, not only BGS 20 target, but also target 1, which was the long-term target when we placed our entry in later May, and also target 2, which was the long-term target if the market would have FOMO based on the hype of a geopolitical conflict and potential new contracts from Droneshield to be released in the market. That was exactly what happened. And over the last few days, as you can see, Droneshield has released 2 new contracts, and that has boosted the price right at our long-term target, which is now the question whether people that has been missing out should be buying Droneshield or sell. I'm going to be answering this video. What's next for Droneshield? I'll be answering in this video, and also share what we have done with Droneshield and what our strategy says that should be doing with Droneshield. Trading around $2.28 as we speak in today's video. And then obviously going to be talking about ZIP. Today, our VP members had a chance to lock 102% profit with ZIP. Obviously, we are still holding. I'm going to be sharing the target for ZIP that we have is still based on our modeling. Okay, and then we're going to be talking about Appen. APX is another very high risk stock. I like to put in the same video, but I want to highlight this. Appen is not near comparable with Droneshield and a ZIP in terms of a growth prospect and the quality of its business, but Appen is a very well sought after stock in the market. Retail stocks love Appen, and when momentum is built, then obviously the stock tends to soar quite substantially. The reason I'm putting Appen in this video is because I think I'm speculating here, okay? We don't have confirmation yet. The Appen could report slightly better than expected in this half-year result. Remember, Appen and Droneshield, they report as per the calendar year, not for the financial year in Australia. Anyway, so Appen, I think, could have a chance of reporting slightly better than expected. And the chart formation from the technical aspect looks very promising, in my opinion. So I think it's interesting to take a look closely at that. So let's kick off this video right now. My name is Les. I'm Chief Analyst of BG Trading Australia. Remember, this is not a financial advice. It's just from BG Trading sharing with you how we trade stocks using BGS 20 strategy together with our VP members to chase 20 to 40% profit within 1 to 3 months. Right? I would like to remind you as well, today, last few hours for the end of financial year offer that we have been offering for new and existing subscribers, 6 months free on 12 months plan, and also 12 months free on 24 month plan. You wanted to commit with us for the long term, this is the time. You also get free online trading course for both of the membership available on the end of financial year offer. Now, if you don't know us, you don't know whether we you want to commit a long term with us, then you can simply go to bgtrading.com.au and subscribe for the monthly plan. There is no contract. Very easy, very simple. You can cancel any time. So let's take a look here. So Droneshield had incredibly run. It ran from our entry point about 116% since we made our latest trade, right? But we did sell in the previous target here. We didn't hold that. And the reason we did was because we wanted to lock in profits. Remember, profit is only profit when it's locked in. The question I'm having is, okay, should we still hold Droneshield? And my question is, I have absolutely no idea where Droneshield going to keep going up right now. What we are good at is to detect when high quality stocks are trading at technically discounted level, offering a greater value and low risk, what we call asymmetric proportion in terms of how much profit we can reach for a certain stop loss. And that's exactly how we played Droneshield and Zip in May for extraordinary rallies. Okay, so now Droneshield has reached what we call hypothetical resistance, which is multi-year hypothetical resistance. And I warned a potential level which will attract a lot of sellers. And that's exactly what happened right here. You can see around $2.50, a big sell-off with a relatively high volume right there, right? Droneshield has enough fundamentals and growth prospects for further rally, but this rally, in my opinion, is hyped now. It's hyped rally based on a macro, based on strong fundamentals, but it is fundamentally overvalued at this price. Just want to highlight this. Droneshield right now is fundamentally overvalued. Okay, can go further. Yes, it could, but I wouldn't be risking of losing my profit at this stage, because remember, trades is all about locking profit, following a effective strategy and lock in profits. And that's exactly what we do here at BG Trading. I don't know why my face is gone, but yes, anyway. So just got to be careful with that. Look, the modeling shows that a few more days of sell-off, and potentially, if this hype continues, we could see a breakout through the upside. But we have no confirmation yet. We only have the first signs of reversal right there of overbought stock. The Heikenach also shows that the momentum is still to the upside, as you can see, green candles. But if tomorrow goes down, then we could start seeing a red candles popping down here, and that would be negative, right? So where is the most safe level to be buying again? Right, if you want to buy at formal levels, then I think we could risk buying just under this last target 1, which by the way was reached right there. I also want to remind this, a month ago, right when we bought the stock, we did the analysis, we share with everyone on our Facebook community, and the reasons why we thought Droneshield was prone for a major rally, right? This one was absolutely correct, and we're very proud that our projection came to realize this like last week. And obviously now, again, if you ask me, should we keep holding? I have no interest in holding this stock now because reach all our targets. Why would I keep holding, right? Remember, markets are highly manipulated. All we need is some short sellers start selling the stock and dumping the stock down again, or people taking profits, even though the fundamentals are really, really strong still. So I rather profit locked in my pocket than be risking if we done incredibly good trades like this. Now, next entry level, as per BGS 20 strategy, we really want to be buying again only if the stock, the candles, goes back and tests this red line here, the SMA 40, right, which is currently sitting at $1.50, right? Can that happen? Yes, it can, right quickly, if we have a shift of funds moving away from defense stocks. It is a good time to hold defense stocks. Yes, incredibly good time to hold defense stocks. But again, remember, there's no guarantees in the markets, all right? The only guarantee is if the stock reaches the target, pocket the profit, and then you can move on to a less risk sector. Now, again, the level to buy would be around $1.50 again. So I'll be expecting this retracement for Droneshield not to come all the way down here, but to test the EMA 9, which is the exponential moving average right there, which still can be tradable, but it's gonna be realizing that this level, it is trading at the formal level. So just be careful with that. Also, remember, both moving averages are now at quite a distance. So the long-term moving average, which is the SMA 250, is still sitting at $1.10. And we have a huge stretch from that long-term moving average. Just watch this out. I'm not holding right now. Just warning, okay? Doesn't mean that cannot go up further, right? Now, let's move to ZIP. As you know, incredibly good stock, almost reaching our long-term target, target 2, which is set at $3.39. As well as Droneshield, it has reached BGS 20 target, then target 1 at 229, and now heading towards multi-year resistance level around $3, around $3.50, just a little bit below $3.50, $3.38. So that's where we set our long-term target. Now, whether we will be selling and locking, we are now at 102% profit as we speak, right? Whether we'll be selling, that's another thing. We will be informing our VIP members if we're selling or if we're setting up a new target for ZIP. I would say really want to see this full year report before making a decision of holding or further from this long-term moving average right there. Obviously, ZIP has enough fundamental growth to keep moving upwards. If you see, compared to CESO has just gone to its all-time high again. It's incredibly, it's moving incredibly faster than ZIP, obviously in the US. In the NASDAQ, market capitalization, I think is about $5 billion now for CESO, which is almost 3 times ZIP as we speak. So things move a lot faster in the US. Yes, ZIP has a potential for breaking this resistance and move towards $4 and $5. We will see, depending on this formation around this resistance level, whether we'll keep holding or we'll be locking in for that will be giving or taking about 130% profit if reaches our long-term moving, our long-term profit right there around $3.38 or more. Okay, that was ZIP. Now let's talk about Appen. Appen is another, this is a WAC stock, very speculative stock. Unfortunately, as I mentioned in previous videos, Appen has been struggled to take a leap on this AI revolution, but seems like the market likes Appen. And the chart formation looks very interesting here. That's why I am sharing with you here Appen. So you see this bullish divergence showing a consolidation around the current levels, which in my opinion, the market is testing and waiting for the half-year result for Appen to see whether Appen will deliver a little bit better than expected growth on the back of this AI revolution. So why I like Appen? Because it's still trading at technically discounted price for long and short-term trends, and also technically fair price. And again, those terms, these terminology is to do with our strategy, with BGS 20 strategy. If you like our strategy, take a look on our online trading course, which, by the way, comes for free in this end of financial year offer that is about to expire midnight tonight, right? So Appen, sort of a like a what we call a reversal formation right there with a higher low here, and I would be expecting for Appen to potentially reach and test the SMA 250 once again, which is pretty much about 40% away from the current level. So if we're trading based on this modeling, I would say there is 40% opportunity right there if our speculative result comes along to be slightly better than expected. Appen being struggled to release successive positive quarter results, but if that happens, we could have excitement in the market, and then this sort of a trade could even happen to be completed, right? So this is my view on Appen. Okay, so bullish intersection level 1 here and level 2 confirmed. Now we need some positive days for these green candles here on the Heiken Natch, which shows a upside momentum to consolidate and our modeling to be confirmed right there. Remember, if you trading Appen, make sure you have stop loss in place. Always have a stop loss in place. It's non-negotiable, and keep in mind now we're heading towards reporting season. Reporting season is very unpredictable, right? Sometimes we are chasing a rally as a result of a report, buying the stock before the report being released in the market, and the report is good, but the stock crashes, right? Sometimes the report is negative, but stocks rally because it was better than expected. So it's very unpredictable. I am not chasing financial results this year, right? Just because it's very unpredictable. So what we're going to be working is what are the companies, the stocks that has reported positively, not in line with the market expectation, and has crashed, but it's still profitable, still delivering some certain growth. That's what we're going to be trading, and that will be value opportunity if that happens. I'm pretty sure that some stocks will take that trend, but as soon as the reporting season comes along and those companies start to report, we will detect one by one, and then these are going to be the next winners in our trading list, and that's when we're going to be making our best trades for the next financial year. Once again, well, guys, thank you very much for watching. Remember, a few hours for the end of financial year offer. Don't let it slide. Great opportunity right now. See you in the next video. Bye.